What's up, YouTube? Came across this video, and they're talking about the demand for mortgages have dropped. So again, I feel like interest rates has a lot to do with it because interest rates right now are at 5, 6%. So we're gonna listen to it, and then I'll chime in.
Diana Olick's been digging through those numbers. Diana, what happened? Well, Becky, take a look. How about the lowest level of mortgage demand in 22 years? You heard it. The pain in the mortgage market is only getting worse thanks to higher interest rates, inflation, and consumer concern in the overall economy. Applications for a mortgage to buy a home dropped 7% for the week and were 19% lower than the same week 1 year ago. Buyers still contending with high prices, even as the supply of homes for sale slowly improves. While buyers are less affected by these weekly rate moves, rates did move higher last week after falling slightly for 3 weeks before. The average on the 30-year fixed for mortgages with conforming loan balances increased to 5.82% from 5.74%, and that's for loans with 20% down. That rate was 3.11% 1 year ago. Demand for refinances, which are highly rate sensitive, fell another 4% for the week. They were 80% lower than the same week 1 year ago. Mortgage interest rates haven't moved much this week, but that could change very soon due to the increasing bond market volatility and, of course, the upcoming Fed meeting. Becky? Diana, what is the word on the street just in terms of this cooling off, mortgage demand slowing down? There's still people, there's still shortages in terms of supply, and you've made that very clear over all the times we've talked to you. How does this play out? If you strip out some of the refi, what does the underlying housing market look like? Well, it's just much less competition out there. There is still underlying demand. Don't forget the demographics are still playing well into housing, and that's why we don't expect to see the kind of crash that we saw a decade ago. That's not the market. What we do expect to see, and what we're hearing from realtors on the street, is sellers need to come back to earth. They have to bring their prices back to normal levels. They need to stop thinking they're going to get 10, 15, 20 offers, all cash, no contingencies. It's going to be a much less competitive market, but there are buyers out there. There is more supply coming on the market. It's a little bit, it's not enough. And of course, yesterday we saw housing starts. The home builders are just not going to help with the supply situation much. They're worried about seeing much less demand through their showrooms, so they're lowering starts. That, again, will keep supply low, which will put a cushion under prices, but it doesn't mean that prices aren't going to soften, because when you don't have the competition, you can't keep prices this high. They were unsustainable to begin with. Diana, thank you.
So there you have it. Interest rates are increasing. Demand are low now because of the interest rates. So, you have some sellers that still think it's 2021 where they can still keep the prices high and that they're going to get 5 to 10 buyers bid on the home. As you can see, that is starting to be non-existent. So, I don't know. As interest rates continue to go up, there's going to be less and less buyers. So it's going to be interesting to see how the year's going to turn out when it comes to this. So, right now, just wait and see. And if the Feds continue to increase interest rates, the demand is going to continue to drop. So, hope I bring you more videos like this. And if you like this video, go ahead and hit that like button. See you on the next video. Yeet, yeet.